Hey everybody, welcome to this week's Wall Street Winners. Very excited to get going here. And of course, this is the high point of my week, is reading this disclaimer. Okay, really, let me just boil it down to a nutshell. This market is boring. And it's a bull market, but it's a very weak bull market. It's not really showing me anything that makes me excited at all. Our fully paid up members, of course, get to see my actual trades, and I put on all the trades in the Wall Street Winners portfolio into my own personal account. And I've got no new trades this week. That's pretty unusual. Normally, I'm always pressing, trying to find ways to make money in every market. Now, of course, not every trade is a winner, but I press, so most of the trades are winners. So we end up making money every year. But right now, I don't really care. I feel like taking a week off because I just don't see anything happening this week that's going to be very interesting. I think the market's going to be on hold until we see election news and stimulus news. I think those are the things that are going to be driving the market. And this close to the election, I can't see Congress getting together a stimulus package before the election. It's possible. They all want one, but they don't want to be able to let the other side get the credit for it. So I think it'll have to wait till after the election. So the election is going to become more and more important as we go along. So let's take a look here at the S&P. S&P's been dipping over the last couple of weeks, but the purple predictor is holding up very, very strongly. So my concern when you get a big dip, like we got in September, then a big rally like we got in September, October, it failed to make a new high, but it should be making a new high. If this was a real bull market, we'd have made a new high a month ago, but we haven't. And that always raises concerns that this is a failure top, and we still have to be concerned that it's a failure top, but at the same time, the purple predictor's firming up. So kind of they offset each other. Dow Jones, similar situation, but this one's a little bit more bearish. Look in the red box and you'll see the red line is above the green line, which means that for the first time in a month, or no, I guess first time in almost a month, we see more selling pressure than buying pressure. That's not bullish. And the ADX, which is the black line, is going down, meaning we're in a neutral market. We're not in a bull market or a bear market. We're in a neutral market. And guess what? It's hard to make money in neutral markets. I hate them. Give me a good bull. Give me a good bear. NASDAQ, similar situation to the S&P. The market's sort of been drifting lower for almost 2 weeks, but the purple predictor's holding up very nicely. Let me point one other interesting thing out to you. Look at Friday's close. That's the little tick on the right-hand side of the bar. That's basically the same place we've closed for 5 days in a row. We've closed at basically the same price for 5 days in a row. That's very rare. Markets usually like to go up a little or down a little at least, but instead the market's just saying, okay, we give up, we're not going anywhere. But the fact that the market hasn't gone anywhere and the purple predictor's going up says that the smart money's taking advantage of this dip to buy. Seasonality, bullish for both the Utes and the stock market, and so we have positions on to make money that way. Now what I've done is I've put up at the top seasonal chart, I put a red line down around 142. If the market drops below 142, then I will end the bullish seasonality. On the utility chart, if it breaks below around 50, just under 57, we'll stop saying that the utilities are bullish. Now, I will move up those two red lines as the market moves up. Okay, so they're quite a ways away from the current market price. But in the Utes, I'll probably move it up to around 62.50 here in a week or two, because that is turning out to be a significant low. We may be able to move the one on the stock market up to around 158-ish if we can break to a new high. But right now, the red lines are when I'll change my rating from bullish to bearish. In the meantime, we're making money on both these trades. All right, now you can see here this week, we're here in the last week of October, and there's one last little spike down, and then all it does is go up for the rest of the year, except for a little dip in early December. And if we're using the green line, if we're using the blue line, it just keeps going up. So right now, this week is when the final seasonal push to the end of the year should occur. So we have to generally take a bullish approach to the market. Even though it's boring, the smart money and seasonality say the market's going higher. That's a pretty good combo for telling us where the market's going to go. If the smart money is buying and the seasonality is bullish, hard to fight that. Asset allocation, stocks getting money from the bond market. Bonds are collapsing right now, which is good because I'm short bonds. All right, now I want to stop here for a second. The market is a risky asset. Bonds are a non-risky asset, and they're non-risky because you can always hold them to maturity, and they always mature at 100. So technically, you always know what price you could sell them at if things were really bad. So what we're seeing, though, here is, and so generally speaking, when people don't want risk, they buy bonds. And when they want risk, they buy stocks. But inside the stock market, there are many gradients of risks. There are IPOs that are very risky. There are biotech stocks that are highly risky. And then there's stocks like utility stocks, which are not very risky. It seems to me that the market is very bifurcated. Word of the day, bifurcated. There's a group of people who want a lot of risk, and we can see it here. We can see that risky stocks are gaining on non-risky stocks. Yet I just showed you utility stocks are moving higher. Well, I don't think that people are buying utility stocks because they don't want risk. I think they're buying utility stocks because they want yield. So we have a group of people who want risky stocks and a group of people who need income. So senior citizens, for example, they can't buy bonds because bonds don't yield anything, but stocks, including utilities, yield more than bonds do. And so it's attracting money into the utility field and other high dividend stocks, and at the same time, attracting money into high technology stocks or drug stocks. Global shares, chop, 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 we're at the same price we were in July. This is even more boring than the U.S. market. The yield curve, slowly creeping higher. Now, for months, I've been telling you that I think that the Fed is manipulating long-term interest rates. And now, since August, really, long-term yields have been climbing slowly. So they're probably still in there manipulating them, but they are allowing them to move higher. And this is actually bullish for the stock market. Now, I wish the yield curve was up around 200 instead of 75. That would be really bullish, and I would be really long the stock market. But at least moving in a positive direction is positive for the economy and positive for the stock market. So neither one wildly bullish, but at least bullish, not neutral or bearish. So this is an important consideration that we're seeing here in the yield curve. So bonds came under pressure every day this week except Friday. They were lower. Purple Predictor is negative now. The smart money's selling bonds. So being short bonds sounds like a heck of a good idea. All right, bond key factors. Let's break this down a little bit. So down at the bottom is the green line. That are 10-year Treasury yields, and you can see they're creeping higher. Right above the green line, or right on the green line now, is the blue line, which is 10-year Treasuries in Germany. And 10-year Treasuries in Germany are usually lower than 10-year Treasuries in the United States. Right now, they're about equal, so let's call that a neutral factor. Above that is the CRB index, and it's been in a major bull market since April of this year, and that calls, generally speaking, for higher interest rates. Above that is the gold line, which is gold, and it's also generally been higher, which also calls generally for higher yields. Now, I say generally for those last two because you can have them come down and interest rates go up. But here's the key. We went through a 6-month period where both the CRB went up and gold went up. And there's never been a period since World War II where when the CRB went up and gold went up, that bond yields didn't go up as well. So we should be in a period of rising bond yields, lower bond prices. And then you'll notice over the last couple of months, gold and the CRB have gone sideways. Now that will affect the bond market in about 4 months. But for now, the pressure is coming from the previous 6-month rallies in commodity prices and in gold. They predict higher inflation, and that's why bond yields go up. All right, the dollar's slowly drifting into the sunset. And if the dollar's going down, we should see gold go up, but gold hasn't made a new high since the middle of October. It's just sluggish and sideways. So even though I think the fundamentals are bullish, I can't get long gold because the technicals are definitely not bullish. Gold key indicators are slightly bullish here, particularly the bottom one. That's a very clear bull market. The one up at the top is a sluggish bull market, and the one in the middle is about as flat as you can get. All right, crude oil also, speaking of flat, I think we've got a balance now between supply and demand. We talked last week about OPEC's change in strategy, and it looks like they now are happy with $40 oil because it's a hell of a lot better than $10 oil, okay? But they can make some money at $40. Particularly in the Middle East, they can make money at $40. Now, the oil industry in the United States, that's not a good price for the oil industry in the United States. But the Middle East producers, such as Saudi Arabia, that's fine. They want to choke off the Americans and make the Americans not important in the market again. They don't like having the United States be energy independent, I should say. They want the United States to be dependent again on Middle Eastern oil. So they want a price that's high enough that they can make money, but low enough that the Americans can't produce. And this is a pretty darn good price to achieve that goal. All right, I told you I was bullish on Bitcoin. I told you I wasn't going to buy any, and I didn't. But we finally broke above the 55-day high, so this is clearly a bull market. I think I was probably the first person to tell you we were going from a sideways market to a bull market, and here we are in a bull market. So from now on, let's say as I say, I personally don't have any. I'm not long Bitcoin. I didn't follow my own advice, but I'm bullish. All right, freebies, love having you here. Of course, you should become a fully paid up member because then, of course, you get to sit with the cool kids at the cool kid table in the cafeteria. So you should consider becoming a fully paid up member. All right, everybody, fully paid up members, hang on for just a second and we'll dive right into more advanced analysis of this market.